Matt, what struck you the most so far about the bank earnings this week?
Well, yesterday when JP Morgan Chase reported, their profits were down almost 7%, and the market treated that like a huge victory. You know, the Dow rose and financials kind of led this rally. The good news behind it was that there's more demand for consumer borrowing, for small business borrowing. Those are actually pretty good signs for the economy. But if you look at the banks themselves, the overall climate and especially low interest rates mean that their earnings are going to keep being squeezed for a while to come.
And a lot of the banks are also seeing bad loans to
Yes.
energy companies, which I think is such a sign of the times. We're still feeling the ramifications from oil's plunge.
Yeah, big time. Bank of America and Wells Fargo both reported this morning. And although there again, Bank of America was a little bit better than analysts expected, but they're still seeing a fair amount of stress from low oil prices that are hurting energy businesses. Both those banks super exposed to that industry. And again, oil prices are rebounding, but it's going to take a while for the banks to benefit from that.
The whole sector is the worst performing sector in the markets this year
Yeah.
so far. But do you think, this is the first earnings out of the gate. Do you think this is going to bode poorly for other industries that are about to report, or do you think this is limited to the banks?
It's not limited to the banks. The economy is not as strong as a lot of people would like, but I would point again to those Chase results where they're reporting greater borrowing. This is the biggest bank in the country by assets, and if they're showing a little more demand for loans, that's probably not great news for this quarter, but a promising sign for a couple of quarters down the road.